Hello everyone, welcome to Commodity Daily Podcast for 3rd January 2026. Myself Neha Qureshi, research analyst at Anand Rathi Commodities. Starting with precious metals, gold continue to trade near record highs around $4,670, supported by strong safe haven demand. Rising US EU trade tension, especially around Greenland, have increased geopolitical uncertainty, keeping investors defensive. Silver has been stronger, jumping over 5% to hit a fresh all-time high as tariff threats pushes more money into safe haven assets. Precious metal outlook. With trade tariff firmly back in focus, precious metals are likely to see high volatility this week. EU leaders are set to meet at an emergency summit, and countermeasures could impact bond markets, given Europe's large exposure to US assets. Investors are also watching the delayed US PCE inflation data, which could influence interest rate expectation and short term dollar movement. Moving to base metals, copper prices remain elevated, supported by a weaker US dollar and supply concern after Chile lowered its near term production outlook. However, market signals are turning cautious. Softer China's demand and potential inventory buildup on the LME, along with weakness in US equities, could pressure prices. A failure to hold above $13,000 may trigger a deeper correction, with other metals likely to follow. Coming to energy market, crude oil is stabilizing near $59 but remains under pressure. Easing tensions with Iran and expectation of higher supply are reducing risk premiums, while fresh US trade tariff could slow global demand. Brent crude may struggle to sustain above $64 per barrel. Coming to currency outlook, the Indian rupee remains under pressure despite a softer US dollar. Persistent corporate dollar demand and continued foreign equity outflow, now exceeding 2.5 million in dollar in January, are weighing on sentiments and keeping the rupiah vulnerable near the 91 level. That's all for today's commodity outlook. Stay tuned and trade smart. This is Neha Qureshi signing off.